Hello, I'm David Chaston with 90 at 9, brought to you by Restocking. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news that markets are agog at the spectacular Twitter float this morning. After the experts priced it at $26 a share, it has now burst higher and is now at $45 a share. Zero-like. However, the overall markets are lower in mid-afternoon trade after big economy news out of both Europe and the US. Euro area government bonds surged, led by Italian and Spanish securities after the European Central Bank unexpectedly cut its benchmark interest rate to a record low 0.25%, boosting demand for fixed income assets. The British left theirs unchanged at 0.5%. In the US, the first reading of their September GDP shows it significantly higher, at an annual rate of 2.8% and up from the 2.5% growth in the June quarter. This is more than the 2.0% everyone was expecting. But a closer reading shows that it was pumped up by restocking rather than consumer demand, and that slowing consumer demand indicates a loss of momentum in the American economy. And based on that, the US Fed is unlikely to taper its bond purchases any earlier. In Australia, employers there have cut full-time workers in October by the most in more than a year, sending the Aussie currency lower. Still, their unemployment rate at 5.7% is lower than ours at 6.2%. Staying in Australia, the federal government is now expected to bring in a budget deficit for this financial year of around 45 billion Aussie dollars, 50% higher than what was indicated during their election campaign, and about 2.9% of GDP. New Zealand dollar starts today at 83.5 US cents, 88.2 Aussie cents, and the TWI is at 77.7. I'm David Chaston. That was 90 at 9, brought to you by Interest.co.nz.